Hey, it's Stefan Angelini from Angel Advisory. It's a beautiful Monday morning. We are ready for a week full of market turmoil, volatility, and plenty of talk about recessions because if you haven't known, financial markets or banks are under a lot of turmoil ever since the fallout of Silicon Valley Bank. It's now fallen onto Credit Suisse, and now you'll see a lot of analysts just going after the banks. It's the 20th of March, 2023. Let's talk about what we're going to unwrap today. So we're going to talk about UBS buying Credit Suisse. So Credit Suisse is one of the 30th largest banks in the world, and UBS just went gulp and gobbled it up. Credit Suisse and how it's linked to the Silicon Valley Bank. We'll talk about whether or not there's a GFC ahead, because it's got a lot of signs of the GFC back in 2008. And of course, Credit Suisse and how it relates to Australia. A lot of our listeners are Australian, so obviously people are asking a lot of questions. So if you want to listen on, look, this will be a longer episode, so just head on over to the podcast, YouTube channel, or check us out on Spotify, Real Wealth with Stefan Angelini. If you want to stay on the line, thank you very much for listening. Appreciate all the feedback. Here's a disclaimer. This is just general information. Please don't consider it as personal advice. If you want any personal advice, go and speak to a licensed financial advisor. Okay, so what are we looking at? Basically, UBS has come in and gobbled up Credit Suisse, pretty much finalized all its negotiations. There was a competitor, BlackRock. BlackRock manages about $8 trillion worth of money. So you can imagine UBS just bought Credit Suisse for 3 billion Swiss francs or 3.23 billion US dollars, which is tiny compared to an $8 trillion market cap like BlackRock. But basically, UBS said, look, we're going to buy it for $3 billion. We're going to take over its $5.4 billion worth of losses. And that's what it lost, $5.4 billion. And we're probably going to close the deal at the end of 2023. Basically, the UBS chairman said it's going to wind down Credit Suisse's investment bank. Now, this will get rid of thousands of employees worldwide, but cost them $7 billion. Save them $7 billion by 2027. So that's a huge saving just by absorbing the operational capacity of another bank. But basically, so Credit Suisse, if you don't know who they are, they're 167 years old. They're one of the world's largest wealth managers. Now, they've been just battered down because they've had pretty poor management. They've been involved in a whole lot of different flings. And ever since they're on Silicon Valley Bank, everyone's just sort of been seeing who is the worst bank, and Credit Suisse is probably one of the worst, especially from an international scale. But everyone's worried this might rip through financial markets. However, the Swiss central bank has come out and said that we support the UBS purchase of Credit Suisse, and we're actually going to support it with liquidity assistance of 100 billion Swiss francs, so 108 billion USD. Now, what that means is that if UBS actually need money to support lending to other different banks or institutions, then they've got the backing by the Swiss central bank. Now, if you get money directly from a central bank, that's the cheapest kind of money you can get. So they're quite fortunate here, but that just means there's a lot of support from regulators. So let's move on to what's actually happening with Credit Suisse. Is it linked to Silicon Valley Bank? Will this be another GFC? And what does it actually mean for Australia? So first off, is Credit Suisse linked to Silicon Valley Bank and Signature Bank and their demise? Yes, but no. So completely different banks, completely different size. Basically, the Silicon Valley Bank and Signature Bank had a run on their money, essentially, and they couldn't keep up with the pace of withdrawals. Now, Credit Suisse could keep up with the pace of withdrawals. There's just a whole bunch of other issues that happened to them. But there was a lot of bad news that came out. The bad news being that people just got worried about the bank and they couldn't finish what they started. Does the bank going under or being bought mean that we're leading to another global financial crisis? So probably not likely. It's worth pointing out that governments, regulators, and central banks are really posting up their support for the financial sector, as you've seen from the Swiss central bank, and the European central banks are starting to do the same. Now, a lot of regulations has changed since 2008, which means that some of these world's largest investment banks, they're forced to hold a larger amount of cash to survive future crises, to survive through crises like today. So it's a very different situation in 2008. Silicon Valley Bank wasn't under these regulations, or not yet, but whereas banks like Credit Suisse are, and that's led us on to the Australian bank. So what's the Australian bank's likely outcome of this? So we're probably not going to collapse or see any collapses of Australian banks. Jim Chalmers, who's our treasurer, came out and said that Australians should be reassured that our institutions are solid, our banking sector is well capitalized, and we're in a better position than most of other nations to deal with the challenges we face in the global economy because our banks are so good. Now, if you haven't really seen, we are one of the most well capitalized banks in the world, being I think top 10, all of our big five are top 10 in terms of liquidity or access to cash. So the Australian banks are now well capitalized, have access to liquidity and strong balance sheets. So got access to money. Now, the direct exposure to Australian banks, basically our exposure of Australian banks is less than 3% of the bank's book, and that's their exposure to Europe. So they're not worried about direct implications and its effects from Europe, but more indirect implications. So banks becoming less trusted of each other and not being willing to lend with each other or work with one another. So that's a little bit of the fallout right now. It's a really interesting period to watch, but just so you know, for your investments, it's important to be well diversified. Financial markets have been really in the limelight because they're a value investment, but it's good to spread your money out because you never know what's going wrong. Tech's starting to perform quite well, especially large cap tech, as they seem to be a run towards safety. All right, guys, happy investing. We'll see you tomorrow. Cheers.